I think a mistake that many founders make is they try and like dress things up for their investors. And it's like, all of a sudden you walk into a board meeting and you think everything's fine. It's like, whoa, like we're going to run out of cash here. It's better to be upfront with whatever the problems are. Having investors that understand your specific space and what that means is more critical than ever. These companies are solving global problems. They'll need to go to market somewhere in the US. Why not Tulsa?
Hello, everyone. Welcome to Science VC, a podcast about deep tech startups, venture capital, and more. I'm JP Orlov, and my guest today is Michael Basch. Michael is the founder, CEO, and general partner of Atento Capital, a pre-seed and seed stage VC firm focused on partnering with founders to build technology around healthcare, climate tech, and business services. Atento Capital is based in Tulsa, Oklahoma, where I recorded this episode during an in-person acceleration program in partnership with GRIDX. Expect to learn how Latin American startups can build a presence in the US, what should be included in investors' updates, the opportunities in Tulsa, including the demo day we are hosting on April 23, and much more. Hi, Mike. Welcome to the show. It's a pleasure to have you here today.
Thank you for having me. It's excited to be here.
I'm very excited for today's episode because I'm recording this from Tulsa, Oklahoma, where Atento Capital is based. So before talking about Atento, I wanted to start asking you about your personal history. I know that you lived in many places in the world, so I wanted to ask you about the story behind Michael Basch.
Yes, and I'm recording this from Cordoba, Argentina, where my wife is from and we're currently living. So my story, my story begins when in 1984 in San Francisco. I was born there. And I was born in San Francisco, but really raised in Los Angeles. I live here in Cordoba by way of New York, London, Tel Aviv, where I met my wife and got married. New York, Tulsa for 7 years, where you are, and Atento Capital is based, and now most recently Cordoba. Though Boston is our next home in come July. And so, my story beyond where I've lived is, I've built multiple companies, there's a couple of exits, started working at a coffee shop, and ended up operating many coffee shops in Los Angeles. And then my friend started a t-shirt company, USC. I joined as the fifth partner, and we bootstrapped that business to $37 million in revenue and sold it to a publicly traded uniform company. And over that time, started investing in real estate and angel investing. And one of the companies in my angel portfolio was a mobile user acquisition business in Israel. I joined there as the president, helped build that from $0 to $16 million in 2 years. And we ended up selling that business. I took a turn and left to work in politics briefly on the Hillary Clinton presidential campaign in 2016, Wisconsin, which we did not win. But the big lesson for me was, wow, there's a whole different world in the middle of the country than California or New York. And I got connected with a philanthropist in Tulsa named George Kaiser in 2017. I ended up moving out there to kind of help think through how to diversify the economy out of fossil fuels and think through venture capital and launch a bunch of talent-related programs. And fast forward almost 8 years later, we've launched 9 organizations. We've helped move over 5,000 that have helped move over 5,000 people to Tulsa, more than 1% of the city's population. We've invested over $500 million across 35 funds and 66 companies, and it's been an amazing journey. And so super, super grateful for the whole thing.
I have to say that's impressive. I've been here in Tulsa for 2 days already. I just want to ask you, how was Tulsa 8 years ago? Because like you said, it was a complete change of the landscape, I imagine.
So Tulsa, when I first visited in September 2017, the Gathering Place, this incredible 100-acre, $500 million park, was almost built. It was a year away from being done, 10 years into construction. The first co-working space just had opened. It's actually the one before the one you're sitting in, Gradient, 36 Trees North, a couple blocks away. They just started making the arts district happen. They built this park called Guthrie Green. So it was just was turning a corner, but it was still kind of early days. And now you go to Tulsa and you can really see there's something happening. And it's, at the time you can kind of tell something was going to happen, but now you can feel like it is happening. And that in my opinion is the big difference.
How did the idea of starting Atento Capital come to life?
When I first moved to Tulsa in the beginning of 2018, I was working, in conjunction with the foundation on both kind of programs and investing. There was a problem with capacity and just how much I could do. So I wanted me, and it's like, well, how do we scale? And so we launched Atento to kind of do the same thing, but at a larger scale. It was originally 4 of us kind of working from a closet. COVID happened, and there were all of a sudden many different problems that were showing up in Tulsa. We were helping to come up with solutions and quickly and getting them going, launched and out the door. And so it kind of grew from there. Fast forward, we officially launched. We came up with the concept. I started working with the foundation in 2018. We came up with the concept in 2019. We officially launched in the beginning of 2020. by mid 23, we had 31 people, 15 investment professionals and 16 non-investment professionals. And so it's been a fun journey.
When you mentioned the George Kaiser Family Foundation, I wanted to ask you about how is the dynamic having a foundation as an LP on a VC firm. This is something that I believe it's not that common out there.
I think the pros of having a single LP is you don't have to do, you're not spending a lot of time fundraising. And I'm very grateful for that. I think the cons are the foundation has a mission. And there's a trade-off between, especially if you're kind of a mission-aligned investment vehicle, the foundation of where are you returns focused or where are you mission focused? And I think like we never quite nailed that. And that's been like an ongoing thing that I think there's lots of learnings in terms of how to think about and balance those two things. And I think some foundations invest only for returns, then they give all their money away strictly for missions, for mission-related work. And some foundations do what are called program-related investments. And we kind of really walk the line between those two things. And I think that would be if I was talking to someone that's going to work with a foundation as a single LP, I would really think through that going into it.
Would you say that the main mission is to bring more people, more talent, and grow the business landscape of Tulsa? Or are there any more specific parts of the George Kaiser Family Foundation?
No, the foundation's mission is to address intergenerational poverty. So thinking about the question of how do you level the playing field for every single child at birth, specifically in Tulsa. In the beginning of the foundation's history, they really focused on social programs, childcare from birth, alternatives to prison, criminal justice reform work, birth control for women. They evolved into placemaking, so building the gathering place with the arts district. And eventually they realized that, hey, they don't do something about Tulsa's economic outlook. All these kids who they're really trying to intervene in and create a better life opportunity set for, will grow up, and where will they work if the fossil fuel industry goes away? And so we're on the economic side, and on the economic side, we're thinking of a few different things. One is how do we improve the opportunity set for the people of Tulsa? How do we grow the talent we have? Invest in the entrepreneurs and see them reach their potential. And two is how do we increase the amount of successful businesses in Tulsa for people of Tulsa to work in? And so we really think through both growing what's in Tulsa as well as recruiting, businesses and CEOs and talent to Tulsa.
All right. Thank you very much for that. I was afraid that I was missing a broader picture with the family foundation, and coming from the VC side of things, I was focusing too much on the economic development, but thank you very much for clarifying that. Talking about this economic development, what are the main areas that Atento Capital is looking to invest?
Atento Capital right now is not writing checks into new companies. Our last two checks were into GRIDX companies, those deep tech companies, Bayou Tactics and Bybug. We were doing follow-on investments only at this moment in time. I would say, though, our personal thesis perspective is I am writing angel checks, and I am we have 35 funds in our portfolio, and I'm actively kind of looking at what they're doing. I'll say my personal thesis at the moment. I think it's an interesting moment in time. On the other side of generative AI, I believe that software is becoming more and more of a commodity. If you're trying to build a vertical SaaS business, let's say in the restaurant space, well, you might have an amazing product, but it would take very little time for Toast, who already has distribution in restaurants, to build the same product and roll it out. So I think it's very hard, to have a moat around software that someone with distribution can't beat you. Not impossible, but very hard. On the AI space, I think it's consolidated in the Bay more than ever, where things decentralized from the Bay for the last 8 years, or maybe up until 2024. I think they've reconsolidated in the Bay on the AI side. And so that leaves you also have the problem with DPI. None of the funds are in the IPO and M&A markets have just not opened up enough to get DPI and liquidity to the LPs who are in funds. So, and then lastly, 80% of the venture capital dollars from LPs went to like 6 funds last year. So you have a consolidation of these mega funds. And with AI, it's more of a winner take all than ever. So what does that all mean? Well, I think it means, in my opinion, optimizing for ownership early in hard tech companies that can sell for $100 million or less and still return a fund. I think that is the model. So I think biotech, life sciences, food tech, ag tech, energy tech, hard technologies, defense tech, hard technologies are very interesting. I think having enough ownership where if you sell a company for $100 million, it makes sense for the fund. I think if I'm an entrepreneur, I'd be focusing on my effort on businesses that don't need to raise more than a Series A, but really a seed round. I think there still will be unicorns, of course. We're in 6 unicorns, 5 of which I don't know. They're doing more than $60 million in revenue and profitable, and I don't know how any of them are going to get to IPO or M&A or how it's all going to work. I see one with a clear path to exit. So I think the model has shifted onto the side of generative AI. I think you're going to see LPs put less dollars in venture as a percentage of AUM. I think people that can figure out how to get DPI and early exits is the solution. I think hard technologies are interesting. With that, I think GRIDX is a really interesting platform, and that's why we spend a lot of time with them.
Before I ask you about your portfolio, I want to jump right into the relationship with GRIDX. That's pretty much the reason why I'm here talking from Tulsa. And I was curious about the details of how this relationship came to be.
Yeah. So, Atento Capital's mission is to unlock unsung potential through financial and human capital and bridging networks. We believe we're better underwriting potential than many people out there. And we believe in looking places where other people aren't looking for that potential. We believe Tulsa is one of those places, right? And so with that, our team naturally skewed the, people who had unsung potential. So we had a very diverse team, majority minority, majority female. We had our investment team of 15 people. We had 3 people who were native Spanish speakers, Spanish first, English second language. One from Venezuela, one from Argentina, and one from Ecuador, I believe. And with that, we're like, that's not an insignificant number of total investors in venture capital that are native Spanish speakers. And maybe we'd have an unfair advantage in reaching out to Spanish founders in either Spain or South America, Latin America. And so we did. And so we spent, our investment team spent some time reaching out to a bunch of Spanish first companies. We found them originally by Tactics. We thought they were very interesting. Ended up investing through that process. We got to know GRIDX. We really loved the thesis of GRIDX. Science-based companies doing hard things and hard technology, partnering them with entrepreneurs to commercialize, de-risking the technology, and then raising a seed round and de-risking the commercial, and then going. And we thought that's super interesting. These companies are solving global problems. They'll need to go to market somewhere in the US. Why not Tulsa? Why not Tulsa, as we say it here in Argentina? And so I really enjoyed it. I think the GRIDX guys are super thoughtful. Matthias and Fede, let alone Maria, Marta, you. I mean, it's a wonderful group of humans, and we feel very lucky to be able to partner with you guys, and not just really smart people, really wonderful people. Life is too short to have too many deep relationships, and so you really want to be careful and thoughtful as to who you build. Who you build long-term partnerships with, and I feel very grateful. I think the GRIDX relationship is a couple years old now, but it really feels like it's evolving nicely and for the long run.
Absolutely, I can say that after meeting the majority of your team here, we are also very grateful to have this partnership, and also we are very excited to be running now the second round of this acceleration program that started last year. I want to also ask you, how do you see these Latin American biotech, deep tech startups finding opportunities in Tulsa?
The advantage of first of all, the technology from Latin America is very good. I believe you want to keep the technology being developed in Latin America and the research facilities they're in. I believe that these companies, in order to reach their global potential, need to raise international capital, US or European, and to also need international customers, US or European. I think it could be Tulsa as easily as it could be Miami or Boston or LA or New York or San Francisco. I've lived or been to all these places. After I moved to Boston, I've lived everywhere but Miami, of those cities. Crazy. It could be any of those places. So then it becomes, well, why not Tulsa? And I think what we can provide is, aside from helping, bring VCs in for a demo day and having a relationship with VCs and make introductions and help the companies with their deck. I think, when you're building a company at the early stage, so much of the company's success, as someone has done this and invested in over 100 companies, either off my balance sheet or through Atento, the founder's well-being and ability to focus will actually make or break the business, and where the company will survive as long as the founder's in it. The founders and the partners are in it, and the co-founders don't give up. And so we make it just very easy. We're going to help the companies land. We're going to get them visas. We're going to get them housing. We're going to get them office space. We're going to get their kids into schools. We're going to have doctors, dentists. So they can just really focus on building the business. Otherwise, I just moved my family of what was 4 to Argentina, now 5 to Boston. It is very hard. It is very, very hard. And so I've moved to London and Israel. I know what it's like moving internationally. There's nothing easy about it. Everything is new. Everything. And if we can keep the founders building their business and not thinking about, where am I sending the kids to school, or where's the urgent care place I need to go to, as well as to try and make smart introductions both to VCs and customers where we can, we think that can give these companies a competitive advantage.
It's amazing that you have the empathy of being a founder yourself, the empathy of moving internationally with your family, and that you bring all this together, the personal relationships of founders while building deep tech. That's amazing.
Thank you.
You have also mentioned buyback, and
Yes.
I wanted to ask you about that experience as well, together with Biotechnics. I talked to the Biotechnics founders here in Tulsa, and they are very thrilled to be here and growing their operations. Going deeper into buyback, why, if you say that the science makes more sense to stay in Latin America, what's the advantage of the commercial landing from Tulsa to the rest of the US?
So I actually kind of think, well, the science in Latin America, mainly because it costs much less money to keep the science in Latin America, and there's already a foundation there. And so unless there's a compelling reason to move it, I would keep it there. I also love Latin America, and I think it's a great place to raise kids. And so like, why unnecessarily interrupt so many lives that are likely doing wonderful, and even more wonderful if they're able to have a big exit and make dollars and be there. And so I think it's a win for all parties involved. Buybook's a great example of, look, Gerardo's now quickly become a good friend. He actually lives in my house and sleeps in my bed. We do whatever it takes for our founders, in Tulsa. It's a similar premise of like, Bybug actually is really unique because there's only maybe 30, maybe more, but let's say 30 customers in the world that like would be their top 30 customers that are so interesting. And they're like everywhere. They're like not consolidated anywhere. So it doesn't even matter really where he's located. It's just, where is he going to have access to get to those places, to those people, and like where will allow him to grow the fastest. And so it's almost for Bybug of just like, what will be easiest, but he needs to be somewhere in these larger markets. And so Tulsa just happened to be very easy for him and his family, and worked out. And so that's, I think, a good example to, they seem very happy. They want to buy a home in Tulsa. They tell me, but the two of the biotech founders have bought a home in Tulsa. So that to me does feel like a good level of, founder market fit.
Right. During the episode that we recorded with Gerardo, he was mentioning clients in Chile, Ecuador,
everywhere.
That's why I was curious about how you think about establishing this network.
Bybug right needs US venture cap. That's what that is right now critical for Bybug, in my opinion. And I think that their case for that is lifted by them being in the US, be it Tulsa or otherwise. Now, Tulsa, we brought 25 VCs there, of which 6 of them are looking at Bybug in different ways for our demo day for GRIDX. Tulsa cohort 1. We have another 11 already signed up for cohort 2, and we think we'll get to over 20 again. And so like, that's hopefully helping Bybug. And we made several introductions to VCs for Bybug. And so, in the end, Bybug, these don't have to be market deals. They don't have to be able to raise money, but we do think the company feels closer to the market by being in the US.
Right. Being right in the middle, being able to fly a couple hours to every coast instead of having to fly from Latin America, it's definitely an advantage. This show is brought to you by We Are Palta. Communicating science and its impact through your business can be hard. We Are Palta has a team of scientific communicators, designers, and specialists dedicated to bridging the gap between science and community. Having worked with more than 25 deep tech startups and VC firms, We Are Palta offers from creating your brand identity to managing your social media. Go to wearepalta.com, that is wearepalta.com, and learn more. I wanted to ask you more about your portfolio as a whole. You just mentioned about sharing a house with founders. Like you said, we do everything for our founders. I'm not going to ask you if you support your founders because you just gave a great example, but I want to ask you, what other ways are you proactively looking to support the startups of the Atento Capital portfolio?
And so Atento has invested in 66 companies, of which we've led 18. I sit on 9 boards today, board observer. We'll lead, historically, we'll have led in pre-seed or seed if they're Tulsa based or want to relocate to Tulsa, like Biotechnics, like Bybug, like Bottle Learning, if they start with the letter B. But there's also 26 other letters.
We want to be clear. That's not a requisite.
Almost always. But I think I usually, I will say this. First of all, no 2 companies have the exact same needs typically. It can be sometimes it's therapy amongst co-founders. Sometimes it's helping raise capital. Sometimes it's introducing a customer. Sometimes it's recruiting a key person or getting a key advisor. I think it's understanding the individual needs of the company, what they need to get to the next major milestones, and trying to be helpful. I think, as an ex-founder, I'll say something kind of introspective. As an ex-founder, I feel like my natural instinct is to like do versus suggest to the founder. And I think there's times as a board member, I haven't been stern enough when I've like known that something is a wrong course of action, or we should hire someone sooner, or we should hire a different person or whatever. And I've been more suggestive when I should be more firm and use the governance that I have, because that's why we have the governance. And that's a lesson for me. I think at times I've let founders make mistakes and learn for themselves. And when that costs you a year, that could be $1 million of burn. Or if founders grown too quickly and lit $3 or $4 million on fire in 90 days from growing too fast. And these are lessons for me as a human investor. And so I think as a whole, I think we try. Atento means, attentive, helpful in Spanish. Atento capital. We really do try and be helpful. I try and at least add value in every single conversation we have, in some way or another, with every company in our portfolio. Even if we're not investing, if we're meeting with someone, they're going to spend time telling us what our business, we will try and help them as best we can. And so at the core, we see the founders as our customers, and we want to make sure that they feel good about the experience they have with us, and we help enable them to build big, successful businesses.
So in your experience, when you're balancing between letting founders make their own mistakes and learn their own lessons, you feel that you have seen that you should have stepped in a little bit earlier and spare them from the mistake, right?
I think there's times I could have saved heartache and dollars burned on mistakes that I made suggestions, but not firm enough, and unforced errors have happened. And that's a lesson for me as an investor.
Do you have other lessons that you have learned as an investor that you would like to share today?
I think I struggle with founders that lack humility. I have a bias against ego-ness and cockiness. And I think if you look at some of my earlier founders, there was more of that. And I think if you look at some of the founders in the second half of my investing career, you'd see much more humble and easier to work with and curious and more willing to admit what they don't know. And I think that's been an evolution for me. I think it's doing more to test how quickly a founder can learn and iterate pre-investment is very key. They can come back, you might have a meeting with them, come back a month and have a completely different strategy and deck with it for a variety of reasons why. And that's a good thing. That could be a good thing. You could pass on something and see an update in 2 quarters and they've done all of these different things. That's a great thing. So the more information you can collect before an investment decision to see that they have the ability to rapidly pivot and then grow and accelerate, better. Better to try and get as much information as you can before the fact. I think, and I know this and I've known this, but sometimes I forget this, is really understanding the founder's motivations and their personal purpose as to why they're building the company they're building, and how it lines up with their personal sense of purpose. When the company lines up with the personal sense of purpose of the founder, even when they run out of money, they're still working. They're still going after it because they feel like they aren't complete until they solve this problem. It's the problem, not the current solution that they have that they must be in love with, but the problem they're trying to solve. Those are the things I think that, I could talk forever. We're in the business of learning. We're in the business of mistakes. Founders make mistakes. Venture capital, invest in 10 companies, 7 probably going to 0, 2 will do okay, and 1 has to go big. So you're in the business of learning about the ones that don't go well. And what was true? What was wrong? What were the assumptions you made that proved to be false? What were the red flags you didn't catch? Something we think about all the time. And then you just try and keep on learning and learning from it and make better decisions in the future. I think go act. And a bunch of people say this, but you get 1% better every day. That does compound. I don't know if I do that every day, but I try and continue to learn something every day.
I'm sure that you're learning every day about different lessons of the decisions you made, but also going deeper on the deep tech space on such novel technologies. Sometimes I forget about the privilege that is to be at the front line of these new developments, these new breakthroughs that most people don't hear about.
It's funny. We send the bio books of our GRIDX founders, and some people are overwhelmed by the complexity of the problems we're trying to solve. I think the best thing I have going for me is I'm relatively unsophisticated, and so synthesizing what these companies are doing as simply as I can so that a 3rd grader can understand it, because my Spanish isn't even at 3rd grade level, but my English is barely above it, and so trying to make I think. I wouldn't call myself a deep tech investor. I'd call myself someone that understands business, that knows how to invest. I think we're just trying to learn how to continue to learn and improve on how to invest, and knows how to knows how to surround himself by people smarter than him both into my own organization as well as the people I invest behind. So when I think of deep tech, if I'm investing at a pre-seed or seed stage, I'm looking for a technical investor to lead. I'll come in as a non-lead behind someone else's technical diligence. I can help the commercialization effort when the company's there. That's my strength, and I know that strength. But on the technical side, I really am looking for someone very strong to be on the cap table. And it needs to be simple enough, or it needs to be simple enough for me to understand and speak to at a dinner table with non-technical people, or otherwise I'm just going to be overwhelmed. So I think deep tech is super interesting. I think there's things that are above my pay grade, and I don't usually, those are not places where I could put capital work, because if I can't invest in things I don't really understand. I think Warren Buffett said that, actually. And so, but I think something I feel it's kind of self-selecting for me is I need it simple, and so therefore I have to make it simple, and therefore that simplifies things.
For the deep tech founders listening to this, do you have any specific advice on how to convey that deep science in a simple way that then allows you to repeat that on a dinner table with non-technical people?
Yeah, so I think there needs to be two separate decks and two separate conversations. Your standard deck needs to be super simple. Then you're going to have your technical investor, which you have a data room, you have a technical deck, and you can have that technical conversation. And I think there's a time to be technical, and you want to be ready for that time. But I think you must simplify to the lowest common denominator of understanding and wait for someone that really wants to get technical before you get technical. That's where I see deep tech founders really struggle with fundraising. And it's super important that who you're fundraising from. Deep tech is broad, biotech is broad, life science are broad. You need to make sure you're with an investor that understands the technology that you're like, that's the right match to understand technology you're building, or has an ability to reference you to someone that can validate it for them.
In your experience, how have the founders in your portfolio found the way to get in touch with these investors?
Getting in touch, at least for our portfolio, tends to not be the issue. Maybe it helps because we're LPs in a lot of funds, so people tend to take our introductions. I think the issue more often than not is around communicating what they're doing or having the right level of traction for the people they're pitching. It tends to be the limiting issue, but getting in touch isn't the issue, at least in our limited 2-company portfolio for deep tech.
Talking about traction, I always like to ask about how to show traction when you're a pre-revenue company or when you're doing paid pilots instead of being on the market selling to big players. How can you show this? What stories of success have you seen in the deep tech space when talking to potential investors?
What is traction? Traction varies on stage, but pilots, ideally paid pilots, and then understanding timing. Where we've struggled is that we have pilots that sometimes take 18 months to convert to customer. And then that customer ramp up starts at $250,000 before it gets 3 years to 10 million in annual run rate. And so like understanding that in detail and then referencing those customers as part of diligence, I think is key. Pilots are vague. Understanding what needs to be true and the technological risk of converting on the pilot. Oftentimes something worked in a lab environment, it's going to work in a commercial environment. How likely or not likely is that? How much is it a pill or a vitamin? Is a vitamin or a medicine for the customer? And how quickly will that customer ramp? And then what is the margin? I mean, these are all like the questions that are the variables. And how much that margin is determined now and how much that margin is still unknown because we don't know what our cost will be at production, right? And so these are all like, there's all this stuff is at risk, is high risk at pre-seed and seed. I'm interested in companies that ideally never have to raise more than a seed because I'm taking a level of technical risk, but I want customer contracts to be big enough that if it works without raising more capital, I'm not being diluted more. So like I'm getting the reward for my technical risk that I'm underwriting to someone else's technical diligence by not being diluted if it works and having a good chunk of ownership of a very profitable business. That's kind of how I think about it.
Right. So you're saying that you're willing to take that technical risk, but again, like you mentioned earlier, taking a big stake on this startup because eventually they're not going to need to keep fundraising. So by the time they exit, you're going to have a well enough position to justify your returns, correct?
Yeah.
How do you think this compares to traditional software startups that we were talking at the beginning of this episode?
I mean, I think fundraising now is just tough. I mean, like, remember 80% of the venture capital went to like 6 mega funds. And we're in generative AI made this more than ever a winner take all. There's just not that many hard science funds, let alone like all these very technical things. These are all like frontier industries. So you don't have like so many exited founders that are running funds so it's like you have a limited pool. So it's like really, the hope is the GRIDXs of the world really know the right investors for their portfolio and can facilitate those meetings and really help the companies be in a place to know how to fundraise. And that's the bet we're all making.
Are we seeing some intersection between AI and broader biology in some space that have caught your eye recently?
It's so funny. I was at a thing called Abundance 360 a couple of weeks ago in LA, and they talked about now being the moment of convergence. You got kind of a neural network with AI, with longevity, with web blockchain, with all, quantum computing, all the buzz, hype, AI, synergy. No, but all the buzzwords converging though. Like everything's kind of converging to your point. AI with synthetic biology or biology. I mean, like it's all kind of converging, which is the opportunity. It's happening so fast that really having investors that understand your specific space and what that means is more critical than ever. Generalist investors, it would be very hard for a generalist investor to lead in for any of the companies coming out of GRIDX, in my opinion.
Do you think that these convergence of such exponential technologies are going into a direction of making us live longer, or are we looking into solving climate change, or one does not have to take from the other?
I'll speak to the US. I mean, the US has a mental health crisis, gun crisis, fentanyl crisis, suicide crisis. I think the average age in the US is dropping. Sadly, it's the only developed country whose average lifespan is dropping. But it's somewhat bifurcated, meaning like there's like, unfortunately, significant subset of society that are in crises that we're not able to solve for. And those are largely on mental health and health in general. And that's an issue, even with 20% of our GDP in healthcare. So you have that over here. I'm speaking to the US, not globally. I think on the other side, you've got a variety of things, 3D printed limbs, gene editing. I hear more and more about aging is going to be treated like a disease that's going to be curable. I think there's going to be machine human interface. I do think, I'm reading a lot about longevity. Do I think there's a possibility that my generation will live to 150 years old and will be relatively youthful in many ways at that point in time and have artificially made components of us or interacting with electronics in some capacity and they'll be like natural humans and they'll be bio-enhanced humans and there'll be like moral and philosophical differences in societies of like the bio-enhanced and non-bio-enhanced. Like, what does that mean for the classes and also what does that mean for countries that are doing it versus not doing it? And I mean, there's a lot of complex dynamics that I think are going to be coming up here in the medium term. It could be sub 10 years for some of these big questions. Are we going to solve climate? I don't think we can solve climate. I think with arable land going away quicker than we can replace it. So I think we will solve it with vertical farming. I think we have fresh water problems. So we'll have to solve it with desalinization. I think we'll have houses that have these systems where it's like toilet water is going in the showers and it's cleansing and it's fine. It's disgusting as that sounds today. And we'll have these like self-contained housing that are on their own grid because our grids aren't, I think it's all going to evolve, but I think there's going to be do I think like natural disasters are going to increase at an increasing rate? Yes. Do I think that will lead to more death and destruction? Yes. Even though there's some people might live to 150, a huge subset of people will not and die from disasters or malnourishment because of food and water insecurity, et cetera. And I worry that we're going to move in a world of more haves and have-nots. And these are all the challenges I think that are going to be the biggest challenges of the next 10, 20, 30 years. And I hope we have, I want to do my part to try and help solve them. I think a lot of the companies in GRIDX are doing their part. And that's why I think it's interesting to be working on these kind of important problems.
Right. These important problems are so big that venture capital, I believe, provides the right vehicle for innovation to happen at the speed that we need.
We will get back to talk to Michael in just 30 seconds. But first, let me tell you about We Are Palta. Raising funds for your startup requires clear and effective communication with your potential investors. That's why We Are Palta works with deep tech companies to highlight your team's strengths and your commercial traction. Discover how graphic designers can enhance your pitch deck by going to the link in the description below or by visiting wearepalta.com. That is wearepalta.com. gridx.com.
You were mentioning the concentration of capital in mega funds and also the concentration in the Bay Area around artificial intelligence. Why do you think that biology is not concentrated only in the Bay Area?
I think as a whole in America, I would say Boston and San Diego, in addition to the Bay, is the vast majority. The Research Triangle, North Carolina, sure, but it's fairly consolidated. And you have some in the Bay. I think it's mainly not in the Bay because it's surrounded by where the research universities are for the most part, is where it tends to be clustered.
In addition to bringing these innovations from Latin America, what other advantages have you seen Latin founders landing in Tulsa, other than the biotechnics and the buyback team, but also the GRIDX founders that have been visiting Tulsa over the last couple of months?
First of all, there's wonderful, warm people. As humans, I mean, obviously, my sucker, I'm married a Cordobesa. Mujeres de todo el mundo de Córdoba. Everyone knows this, but no, I think what I love about, especially Argentina, first of all, I'm hugely discount everything I say by the fact I'm hugely biased to Argentina as a country. Latin America as a region, but Argentina specifically as a country, I think it's amazing here. And I'm rooting for Argentina in all of its ups and downs and heartbreaks and everything. I'm rooting for LA, and I want to see Argentina be restored to a G7 economy that was 100 years ago. And so what I think the advantage that the advantage that the Latin American founders have, that us Americans and our consumer economy have forgotten, is true scarcity. Because there's so little resource here, people here are can be happy with much less, and the founders can go so much further with so much less dollars. Their needs, the scarcity forces scrappiness that us Americans, especially Bay Area Americans, just do not have. And no respect, I was born in the Bay Area, so I can say this, I guess. But I probably wouldn't be a successful Bay Area founder. First one to admit it. But I really admire how much Argentinians and Latin Americans as a whole can do with so little, and that's why I think the opportunity is what if you did give them access to some resources? Let's really see how much they can do, and that's kind of how I think about the opportunity as a whole.
Yeah, I think we are seeing this. We're seeing this across other accelerators in the US, but also in the rest of the world. How do you think that we can talk today about the challenges of going from Latin America into the US in terms of fundraising? You mentioned that buyback is facing the challenge of fundraising, and the US is the best way to do it because their clients are all over the world. How can we help Latin American deep tech founders to reach the US VC market?
Look, first of all, I have a huge amount of empathy for anyone trying to fundraise in a second language. I can barely, here I am, I'm married to an Argentinian. I've been with her for almost 8 years, and I have lived here for almost a year, and I've taken Spanish lessons for like 6, and I still can barely, I couldn't do a convincing pitch in Spanish for sure to fundraise. So I have no, I have no chair to stand on. I've got no face in criticizing in any way, shape, or form anyone trying to fundraise in a second language. So discount everything I say by that. But look, fundraising is tough in general, let alone the fact that you're coming into a new country with almost no network effect. Your legitimacy is GRIDX. So GRIDX needs to know, if GRIDX to make an introduction, they're then validated, but GRIDX is still creating its own brand in the US. And the hope is someone like IndieBio and some of these people that are really looking at the Latin American market will be your bridge. GRIDX in time will be that bridge. We're hoping to play a role in that bridge. But you have the language challenge, you have the network challenge, you have the macro environment market challenge. And then it's just really knowing, with all those challenges, getting in front of the right investors for exactly what you're doing, which is each of these companies. If you look at the spectrum of GRIDX companies, they're all in one kind of, I don't know, studio, whatever you might call GRIDX. They're all in one program, but they need, many of them need very different profiles of investors, and that's a challenge. And so, these are all challenges, all overcomable challenges. It was easy, everyone would do it, but so it's hard. And so the ones that have what it takes, we'll figure it out.
Yeah, I agree. And on that same note, out of all the verticals that GRIDX is investing on, are you particularly curious about a vertical that you think that should get more capital from VCs in general?
I'll say, even though I've had some success in consumer investing, I'd say consumer is by far the hardest. And I think B2B businesses are easier to underwrite from even a diligence perspective because you can talk to potential customers, versus like a human on the street. And so the consumer stuff, I think, is the toughest. And I think focusing on B2B is an easier, so, you're going to have to select some kind of four walls to put around yourself. That's the way I would think about it. Look, let's look at the world, right? What are like the big, the energy is a huge thing. Water is a huge thing. Food is a huge thing. Medicine is a huge thing. These are huge buckets of like life. Those are all big, massive markets to solve for humanity, for the species. And so like, I think it's like in those spaces are doing important things. Those are critical issues. So those are the things I think are the most interesting.
How do you see the Latin America startups evolving into the US? Do you think that it makes sense for them to stay doing R&D in Latin America for a very long time, or throughout the investments that Atento Capital is making, that you also would like to see some R&D happening in the US?
So look, I think each company has its own journey. I mean, remember, I am in the camp of selling a business for $100 million in 5 to 7 years. So the teams don't, for many of these businesses, don't need to be so large. I think if the founders want to move to the US for whatever reason, so their kids can grow up in the US with the US passport's great. Okay, that can work. If the founders want to stay close to family and friends in South America, Latin America, great. That can work too. I think the key thing is being lean, not raising too much money, so you don't need too big of an exit, so you can actually sell and return capital to your investors, so they can go invest in other companies, and you can go start another company, or invest in other companies, and do it again. Like that is the model, in my opinion, at this moment in time. And so, like, for biotech, I think, I think they're having, I'm excited about where they are at this exact moment. Do I want them spending the next 7 years building a business, and in 3 years, the Mendoza office surrounded by wonderful wine shuts down and they move the whole lab to Tulsa? I mean, sure, that'd be great for Tulsa. I'd love the 20 jobs or whatever that might be, but I'd also rather them sell the business in 3 years for $150 million. That'd be a better day for everybody, in my opinion. And I think that's what we should be thinking about. And so like, I don't know, I think like we don't need movement for the sake. Look, first of all, I want to spend my time on the movement of people for economic opportunity. I deeply believe in that core thesis, and that's where I want to spend all of my efforts. And so like, I definitely am in for that plan. I just don't think doing it for the sake of moving for the sake of moving. I think moving for the sake of what makes sense for the individual and the company, and optimizing in each case based off that.
You just mentioned before about the lesson of trying to look for founders that are not that cocky. What other characteristics do you see in potential founders that are immediate red flags?
I mean, look, I think the know-it-all founder that has an answer for everything, which I used to be myself, so I know what it looks like. That's top of the list. I think, look, I think for people that are in it to purely make money, it's fine. There's people that invest in those people, and I just, like, my life's too short. There's nothing wrong with that, by the way, but it's just not where I can spend my time. I think the money will come as a secondary outcome for an important problem being solved. I think people that are, and I also suffer. I mean, look, first of all, I've made all the mistakes. I mean, I'm still making mistakes, but I've made many mistakes. People that want to grow too fast, that don't want to have levels of validation before they expand more, that want to spend too much money too quickly. People that, I think it's really important to understand who they have around them. Are they able to build a team? Are they able to keep a team and develop a team, inspire a team, recruit? Can they look someone in the eye who's making $400,000 at Google or Tesla, more in the hard technologies, and get them to leave that cushy job to make $100,000 with some equity? Would people be inspired by this person? And can they rapidly iterate? Can they rapidly iterate quick enough as the world changes, as generative AI changes, as technology changes, as the market changes? Can they iterate into wherever things come fast enough? They have that in them, and that's hard to test for until it happens to some extent. Yeah. As a whole, though, I've realized that I'm just not so smart that it's like, you're not going to tell in one meeting. It's like, how can you get as much information without unlimited time to spend with someone, by triangulating, having me other people to get other angles, to try and collect as much information you can in a reasonable amount of time to get a strong enough conviction on the human and the humans involved. That's at the earliest stages. That's the everything.
Right. Having many meetings, but throughout time, so you can measure that improvement that you were talking to earlier, right? How soon is it too soon to start making this relationship with potential investors? Do you think that the earlier the better, or do you think that there's an appropriate time frame to start these conversations with investors that could lead around or be a great follower on a fundraising effort?
Yeah, that's an interesting question. And I think this is a tough one because like some investors are more open to meeting people than others. Some investors are smarter with the time than I am. I probably take too many meetings and probably need to be more stronger discretion. I think in a perfect world, you're understanding who you're relevant for. It's like, you don't need to meet every investor, but who are the 5 or 10 investors who you're most relevant for the next 2 rounds of your financing? And you try and have a meeting with them and you go in there asking questions and tell them what you're thinking about and asking for advice because they've probably looked at a million different things in the space and they probably have a good number. And then you just add them to an investor update and you send an investor update somewhere between like monthly and quarterly, probably like every 4 to 8 weeks. And you let them actively track you or passively track you without having to have to meet with you. They can read a 5-minute read update whenever, and hopefully there's some interesting things in it. And then at some point in time, you'll have a process and you'll let them know you have a process and then you'll ask them if they want to be part of it. And maybe they do, maybe they don't. And my advice is to try and get a meeting early where you're not fundraising and you're asking for questions and trying to get their thoughts on it and you give them updates based on your conversation in a passive way.
Right. Sometimes I feel that the opportunity of keeping updated potential investors is overlooked.
Yeah. I really, even my existing portfolio don't always do a great job of updating existing investors as well as people that they could be their next round of investors. Like it's all templatized now. I bet you can get ChatGPT to like write it for you. I mean, but like really, it's like obviously overlooked and these investors put in their CRM and they can then look very quickly as to see like what your traction and growth has been.
What would you like to see more on those investor updates on actual investments, not potential investments?
I should put in my visible.bc dashboard. I think I'd like to see, look, what do you want to see? What are you going to do? What do you, and let's say they're quarterly. Let's just say for simplicity's sake, they're quarterly. What were the big accomplishments last quarter? What are you going to do next quarter? They can be product, revenue, team, cash, burn, run rate, forecast, performance of forecast, cost per acquisition, if as that makes sense, lifetime value, net retention rate. I'm now getting specific with my existing portfolio. These are all things I'm thinking about. Biggest challenges and asks. Those are like, if nothing else, what is not working and what do you need? What are the biggest needs of the business? Like that, I think investors I think a mistake that many founders make is they try and like dress things up for their investors. And it's like, all of a sudden you walk into a board meeting and I think everything's fine. It's like, whoa, like we're going to run out of cash here. It's better to be upfront with whatever the problems are and ask for help if you need it or ask for advice or come with a problem and give the proposed solution you're thinking about for someone to react to. I might not have the solution, but maybe I know someone that has the solution, or I at least can look at your solution and might have a way to, maybe I agree with it, or maybe I have a small suggestion or a small thing to think about. I don't know. But I think it's just helpful to get as many people's opinions you can on it and then synthesize and make a decision from there.
I really like this concept that says you're an early stage startup. So definitely there are things going wrong, multiple things at the same time going wrong. If you don't communicate that to your investors, they know that there are things going wrong, but they don't know which things, so they cannot help you. So I think it's important to stress that areas where you can ask help for investors and making specific asks, of course, not just giving a broad overview of the problem, right?
Yeah. I think asks and we're in a bad situation. Here's what we're thinking about doing to react to or like create from the founder.
Right. Not only the ask to solve the problem, but also asking for opinion. I also think that that's important. So I wanted to ask you now about the program we are running here in Tulsa with the GRIDX startups. Why should VCs visit Tulsa for demo day that it's coming up in the next couple of weeks?
So look, the way we thought about it, if we have 11 VCs already confirmed, one's from Vancouver, one's from London, one's from Puerto Rico. So these people are coming pretty far. But if I'm a VC, these are the space I think about. And I have 3 options. If I want access to these companies and I have 3 options, I could either do a Zoom, go all the way to Latin America, or go to Tulsa, and then also have my flight and hotel covered essentially. In addition to have like a VC dinner with other VCs and have some like very thoughtfully done programming. To me, it's decent value proposition because your space is limited. And this is access to an entirely different market you wouldn't have access to otherwise. And so, I don't know. I'd be curious. Out of the VCs that came last time, I think we have 6 or 7 returning. So they clearly, I mean, 3 were like within an hour, or like 1 was within minutes, but 3 were within an hour of the invite coming out to come back. So, like, one's from Canada, and 2 are from Canada, and they're coming back. God, I love Canada. I love Canada, and I'm pro Canada not becoming the 51st state for the record, but I really love them, and I think they're set up a great place for whatever happens to our climate. I think about Canada a lot, but natural water and resource perspective. But I just think, look, everyone has to make a decision for themselves. But if I'm in a very niche industry, and it's just a huge market to have access to someone that's looked at, GRIDX looked at like 5,000 concepts or 5,000 like research related concepts, science related concepts in South America and in Latin America, and they've taken 80 something companies, and this is our second cohort. So we've taken what we think are the most ready 22, aside from 1 or 2 that are like too far along. So that's like a decent amount of like funnel for you to then cherry pick whatever's interesting to you. Like I think like a lot of we've done it, and we're bringing them like 90% of the way to you by taking them 5,000 miles to Tulsa. So I think it's just like a reasonable value prop for you.
I agree. It's a very solid value proposition. I'm already here, but I can say that it sounds really good. Awesome.
Appreciate that.
What's next for Atento Capital?
Well, Michael Basch, I as a general partner will be going to Cambridge in July and getting my second master's at the Harvard Kennedy School in Policy and Public Administration, which I'm really excited and grateful for. I'm grateful for my wife that's up for it with my 3 young kids. Yeah, 3 kids 4 and under. So while doing that, we're now not investing in new companies, we're managing our portfolio. I'm really thinking about the movement of people for economic opportunity and building things around solving for that. I think there's an intersection with government on that, which is why the public administration part's interesting, but from a private sector lens. I'm thinking about this program is a version of that. And so I'm thinking about that. I'm thinking about Tulsa, that. I'm thinking about America and that. I think of the world in terms of that. And I think Atento will evolve and continue to manage through its existing portfolio and continue to evolve in terms of, what is the best use of, we have only been, with longevity, maybe, God willing, we all get to live for a very long time. But however long that is, I think we owe it to ourselves, our community and society to maximize our contribution while we're here. And so, I really want to contribute, if I can help 1 million people, move over 20 years for economic mobility, and I think it's a good use of time. And I'm interested in that from a private sector lens. So we're probably moving in the direction of that. We're doing that now, but how do we really scale that? And so some more to come. Ask me on the other side of the Kennedy School.
For the people interested in learning more about Atento Capital and the wonderful work you're doing, what's the best way to stay up to date or stay in touch?
Our website, we have a newsletter, but you just add me on LinkedIn, Michael Basch, Atento Capital. I post every month or 2 about what's going on. Atento Capital has a LinkedIn site. We have a website, but it's less active. That'll probably be the easiest way to track us.
Perfect. I'll make sure to link that on the show notes. And Mike, thank you very much. Thank you very much for being part of the show and for sharing all these insights.
Thank you for having me. I appreciate it.
Thank you for watching this episode of Science VC. I hope you found it valuable and insightful. If you did, consider subscribing so you don't miss the great conversations coming up in future episodes. And if you're looking for more, YouTube's algorithm has selected this video for you. It's a great way to keep exploring deep tech and venture capital, so give it a try. I think you'll find it interesting. That's it for now. I'm JP, and I'll see you in the next episode.